U.S. stocks are surging as jobs disappear. Since bottoming out in March, the U.S. stock market has soared by approximately 60%, one of the biggest rallies in market history. The Dow-Jones Industrial Average, topping 10,000, may not be strategically significant, but it's a psychological breakthrough, so they say. While the Dow Jones has been racing upward, however, the unemployment rate has also skyrocketed from 8.5% in March to at least 9.8% now, and still climbing. The U.S. economy has lost 7.2 million jobs since the recession began at the end of 2007, and the trend is still going the wrong way. The unemployment rate will almost certainly hit 10% and stay there for a while. So a job loss is good for the stock market? Actually, yes, at least for a while. How can that be? Stocks are rising because many companies are earning more money than economists had expected. But earnings aren't up because companies are selling more stuff or more things. Most companies are still selling less and dealing with falling revenue. Instead, earnings are rising because companies have cut their costs more and revenues have fallen. Well, at least for now, for the short term. And costs are often the same as jobs. Johnson & Johnson said third quarter revenue declined 5.3%, but net earnings rose 1.1%. Domino's Pizza said revenue declined 6% in the third quarter, while net earnings soared 77%. Abbott Laboratories reported its third quarter revenue rose 3.5%, but net earnings shot up 36.5%. PepsiCo revenue fell 1.5% in the third quarter, but its net earnings climbed 9.5%. Alcoa said its third quarter revenue rose 9%, and it swung to a narrow profit of $124 million, compared with a $459 million loss in the previous quarter. Each of these companies laid off workers over the last 2 years, probably necessary to keep the companies healthy. And it's worth keeping in mind that when earnings outperform revenue, theoretically it's a sign that the company is well run, assuming there's no Enron style hokey pokey. But CEOs also know that you can't grow a company or keep juicing the stock price by cutting costs and slashing jobs. Real growth only comes from new customers, new business, and increased revenue. And on that measure, the outlook is murky for both the stock and job markets. So, the more jobs that are lost, the better the U.S. stock market does. There's something wrong with that picture. Just like with the more the U.S. dollar is devalued, the more the stock market rises also. That's like going backwards in some kind of way. The same workers who have been getting laid off, improving the cost profile for many companies, are also consumers running out of money to spend. Some are going bankrupt, defaulting on bank loans and losing their homes. That's a major risk to corporate profits and stock prices down the road. Some companies will be able to coast for a while. The weak dollar and relatively strong economies in Asia and parts of Europe and South America, for example, are good news for U.S. exporters, since it helps them offset weak domestic sales with stronger business overseas. And more efficient companies can withstand lean times longer. But most American companies still rely on American consumers to keep business humming. Sooner or later, the U.S. job and stock markets need to go in the same direction. When will that happen? The question is whether the job market will hitch onto the coattails of the stock market, with companies starting to hire as their fortunes improve, or stocks will turn south as the ranks of the unemployed swell. Good thing workers and investors both have become familiar with uncertainty. There's something wrong with that picture. And on top of all this, there's something much more going on here. There are fundamental problems with the U.S. economy and the economies of the world. It has something to do with greed, pure greed. And this is an illusion of a recovery. A fake recovery in some kind of way is happening. And these are more signs of the end times transition days. The transition is ongoing. It's happening all around the world, day by day.